I'm Tracy Tucker, and this is Discover Flint Township, brought to you by Flint Township Economic Development Authorities, HEP Financial Plus Credit Union, Shea Automotive Group, and 103.9 The Fox. This morning, I have Sherrie Dalton here from Financial Plus Credit Union. How are you today, Sherrie?
Great. How are you, Tracy?
I am wonderful. It's a beautiful day in the neighborhood. So what are you here to talk about today?
Well, did you know that June is National Homeownership Month?
I did not know that.
It is. And also, Financial Plus is celebrating our 70th year anniversary.
That is so wonderful. They've been in Flint Township, I think, the whole time, right?
Yeah.
Yeah, wonderful. That's great. We love to hear success stories in Flint Township. So what else you got going on?
So along with our anniversary, right now we've got a $700 off closing cost special promotion going on. And better yet, it's not just for June. It goes all the way through the end of August.
Wow. Great. Great. So, and then you got a special on closing costs, but so you're talking about loans for homes and all that kind of stuff, right? For those closing cost loans. Okay. So what types of loans do you guys have?
Well, we have conventional financing, FHA, MSHDA, rural development. We have portfolio loans and equity loans.
Okay. So what would be the reasons to go with FHA versus the other financing?
Okay, well, FHA is a great product, and a lot of people don't realize some of the differences. So I've got 12 reasons why you would want to consider FHA financing. One is that it has flexible credit and underwriting guidelines.
All right.
And with FHA, the minimum credit score with Financial Plus is 580.
Wow, that's pretty good.
Yeah. And actually, if you have a credit score that's less than 650, the FHA interest rate is almost always better than conventional financing.
Wow, so that's a good reason. Make sure you're checking your credit scores before, and they'll do that when they come in and talk to you about the loans. You'll talk to them about where their credit score is and what they should be looking at, right?
Right.
And so what about down payments?
So with FHA, it's a 3.5% minimum down payment.
Okay.
And another big benefit with FHA is you can have 100% gift funds.
What does that mean?
For your down payment. You can have a family member gift the money for the down payment.
Oh, okay.
So, that's a huge benefit. So there's some documentation requirements that are pretty strict with that, with FHA guidelines. So you want to make sure that you're checking with the lender, making sure you're following the guidelines for the documentation of that, because otherwise, if you don't, it can create some delays and problems.
Yeah. We don't want that. Now, when it comes to loans, there's enough delays and problems when it comes to loans. You want to make sure you're not the cause of it, right?
Right. So we have a gift letter form, and then we've got instructions on how that documentation has to go. And
That's
make sure you do that.
That's awesome. And how can the seller help you with your loan?
So with FHA, a seller can contribute up to 6% towards the borrower's closing costs. And that includes property taxes, closing fees, the homeowner's insurance, title insurance, and lender fees. They can all be paid by the seller. So make sure that you keep that in mind when you're negotiating a contract.
Okay.
That can definitely help a borrower out a lot.
Sure. And then with the interest rates and mortgage insurance, how does that differ with FHA?
Well, like I said, if your credit score is if it's under 680, the interest rate and mortgage insurance on an FHA loan can be much lower than a conventional loan. Okay. So another reason why it's so important to compare between FHA and conventional financing.
Sure. And what about student loan debt? How does that affect?
Well, different mortgage products have different guidelines with regard to student loan and how we calculate your debt to income ratio.
Okay. Right.
So with FHA, they're a little bit more lenient, and that then enables the borrower to qualify for more of a loan because they use 0.5% of the monthly, or 0.5% of the balance for determining the monthly payment.
Okay. So now, non-occupant co-borrowers, How does that work? Is that okay? Not okay when it comes to FHA? What's the insight on that?
With FHA, it is okay, and actually, it's another great advantage because even if the person's not going to live in the home, you can have an unoccupant co-borrower, and it works really well when you've got maybe a parent that lives out of state and they want to help their child get into a home.
Yeah, we had this issue because my daughter, we were trying to help her, and there was, it was like, oh, you don't live together. I'm like, well, no, because she's buying her own house. Trying to get her out of mine. No, just kidding. So that's interesting that they are open to that. And what about wait times?
Oh, wait times, yeah. If someone has negative credit, like a bankruptcy or foreclosure, FHA is more lenient with regard to how long you have to wait before you can apply for a mortgage.
Okay.
So with FHA, if you had a Chapter 7 bankruptcy, it's 2 years since the date of discharge. Compared to conventional, it's 4 years.
Okay.
And then for foreclosure, it's FHA, it's 3 years, and conventional, it's 7.
That's a big difference.
Is.
That's a good opportunity for people that might have had some problems and now they've overcome them and they're trying to get back on their feet. So that's good. Now you told me you had 12. That's only 9. So what else you got for me?
So with FHA, there's no income limitations.
Oh, okay. Okay.
So it's not required to be a first-time buyer with FHA, but there's no income limitations, there's no property location restrictions, and it's just a great product.
Okay. And then what about property location? Are there any restrictions on that with the FHA?
No. There's no
Okay.
property restrictions.
Okay.
There is a maximum loan size, which is now it's all the way up to $420,680, which is
oh my gosh.
Yeah, not long ago it was in the 100,000, 200,000
Yeah, it used to
maximum.
be. Yeah, it used to be really low.
Yeah.
So do you have to be a first time buyer for FHA? Because it used to be that way, didn't it? At one time? No?
Well, I don't believe so.
Okay.
Yeah, it's that's a myth, I think.
Yeah, it must be.
So no, you don't have to be a first-time buyer.
Okay, so you don't have to be a first-time buyer, and the maximum loan size is now $420,000, and you guys are given $700 off closing costs.
That's right.
Through August,
and that applies to FHA as well.
Oh, that's awesome. That's awesome. So what about now there's different types of loans. You said there's fixed rate. Is that the other type, or portfolio loans? What is that?
Portfolio loans is actually a loan that the credit union holds in-house, and they're the investor of the loan. So it's not an FHA or conventional, although we write our loans pretty much to Fannie Mae guidelines. It allows for some variance. So as long as the loan makes sense on a case-by-case basis, if it doesn't fit conventional guidelines, it might work in our portfolio product.
So that gives you a little more flexibility when you're dealing with somebody. Is there a maximum on that, or what? Or is there a minimum on those, the portfolio loans, or is there a maximum, or is it just that's a product they can look at when they're coming to you? Right.
I don't believe there's a minimum.
Okay.
It also is a great product for jumbo financing.
Okay.
So we have fixed rate pricing on our jumbo products, which most lenders, I believe most lenders out there offer jumbo pricing on an adjustable rate mortgage.
Okay. All right.
So
that
that's
makes
a big
sense.
advantage.
That makes sense. So then there's also, you have home equity loans, which, because I was not well informed the first time I started talking to people about these mortgages, they kept talking about HELOCs, and I'm like, what's a HELOC? I got to find this out. So I actually asked them one time during a show, because they were like, oh, we're going to talk about HELOCs today. And I'm like, okay, I'm going to ask you this question. I'm going to ask it on air. What is a HELOC? And then they told me it's a home equity line of credit. So now I'm in the know, and now our listeners are in the know. So And they're probably all laughing at me for being stupid, but that's okay. If you have a question, especially when it comes to financing, you should always ask it, right?
That's
Because
right.
Definitely. You don't want to get into something bad. But so let's talk about home equity loans. So what is the first type there is?
So we offer a 10 or a 15-year fixed rate home equity.
Okay.
And all the funds are dispersed at closing on a home equity loan. So you start paying interest, you start making payments right away on that. Compared to a home equity line of credit, it's tied to a variable rate, subject to change. It's more like a credit card where you can, use it, pay it off, and then reuse it.
So those are good, like if you have an emergency around the house, like,
Right.
Your roof caves in or
Right.
your furnace blows up, your air conditioner cracks in the middle of summer and you have no air. I've had several problems, as you can hear. No, I haven't really, but it sounds good. Hey, so that is a great option to have. And you don't have to actually, you can get the HELOC without actually using the funding, right? Just have it there in case you have an emergency.
That's right. You can.
Yeah. See, that's awesome to know it's available. You don't have to use it until you actually have something happen that you need it. That's pretty cool. And you guys don't charge anything interest to have the line of credit until you actually spend something, right?
That's right. And we don't have any closing costs either. So as long as you close the loan, whether it be a home equity loan or a line of credit, there are no closing costs.
Okay.
If you change your mind and you don't close, if an appraisal was done, then we would have to charge for the appraisal.
Okay.
But other than that, no, there's no closing costs. So you can get a home equity line of credit, get it open and have it there in case of an emergency, and there's no cost and there's no interest.
That's cool. That's pretty cool. So, so you guys pay all the costs. That's amazing. I'm just sitting here thinking about what she just said. Sometimes I hear it and then I have to digest it. So, and are there any penalties for prepaying off?
No, there's no prepayment penalty.
Oh, wow. That's pretty cool. So, I know a lot of people, there's so many places where you can get mortgages. And I know, we have the mortgage lady that's on all the time. They do them as well. And you guys do them and everybody and their brother does them. But, I always try to push people to our local people, right? Because when it comes down to it, everything's local. And if you want questions answered and things like that, they're here. You can go to them. It's not just some empty voice on the phone or an impersonal email. So what are your thoughts on that about local servicing?
Definitely. I think it should be a priority for everybody because, you want to keep everything local if you can. We really need to take care of each other. So,
right.
But also it gives peace of mind. So, you're taken care of by a local trusted and experienced lender. And local processing, underwriting, and local friendly servicing is what we provide.
Right.
Our servicing is held right here, in Flint, and
right.
You can talk directly to our servicing department.
Right. Yeah, and you have the lenders, processors, underwriters. They're all there, right? So they're not going to you and then you're sending it off someplace else, right? That's awesome.
Yeah, it's not outsourced.
Yeah. So, what is Mortgage Week? What is that?
That's our upcoming event in our branches, and that's opportunity to come in and meet your local lender and talk about your short and long-term goals and see if there's any way that we can save you some money.
All right. Awesome. So what are your branch locations?
Well, we have the Flint main office, Corunna, Swartz Creek, Grand Blanc, Davison, Saginaw, and Fenton.
Okay. And how can they get a hold of you or apply?
Well, you can apply in person or over the phone, online at our website at myfpcu.com.
Sure. And they can get a hold of you at?
My direct line is 810-244-2163.
And her name is Sherrie Dalton. Don't forget that.
That's right.
And where are you located at?
I'm actually in the Fenton branch.
Oh, okay. Well, we'll let her be here, even though she's from Fenton branch. You're on Silver Parkway, though, right by
Right.
Home Depot.
That's right.
awesome. That's awesome. Well, thanks for coming in today. I know Rusty is giving me the eye because we went a little long, but it is what it is, Rusty.
Thank you so much.
But yeah, no, it was some great information. We love having you guys in. We always appreciate your support of the show and bringing our listeners great information every time you come on.